Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Chicago wheat and corn. Chicago wheat. The main recent activity has been the fall below the significant neckline extension, currently at 654, of the small October 2020 to November 2020 head and shoulders top, which you can see highlighted on my daily chart in dark blue. This neckline has a fairly wide congestion area clustered around it, formed from late April to mid-July, from about 609 up to 679, and includes on top the declining long moving average, currently 673, and just below it now the flatlining medium moving average, currently 645. It is this that had been pressuring the top of rallies throughout September, now into October. Last week I also said, and I quote, "We have also seen a pattern form over the last few weeks. The pattern I have in mind is an unusual one. It is one that immediately springs to my mind but looks in the wrong place. And that is to see the whole of the late May to end of July action as a double top with a neckline at the same neckline extension of the small but influential October to November 2020 head and shoulders top." And that's the end of the quote. I continue to wish to just lodge this idea in your mind, as there is something more immediate which I will deal with shortly. So with this pattern in mind, we do have some interesting supports below. Notably, and on a closing basis, the May 2023 low at 587.75, which is just below the March 2021 low at 592, and on a pure low basis, the September low at 570, which was tested at the turn of the month from September into October, and so far has held. This still leaves us with the secondary and hard to reach target X2 at about 502 for the double top pattern. Below these supports, as well as some others, notably the September 2020 low at 545 and the slowly rising 2016 to date optimized uptrend, currently at 519. The potential target X2 is also just above some quite historical congestion supports between 495 and 500. Thus we have a very much harder to reach target below, and for now I will leave it as such, because there is something else developing which looks of more immediate interest but also of a bullish nature. The action since mid-September to date, which looks like a possible horn bottom, may even be seen as a triple bottom with early September's action, but that is only on the continuous daily charts. For now, I will look to the late September to date action as a possible horn bottom, with a primary target X in the 640 area, which is not that far away, and a secondary harder to reach target X1 in the 650 area. If these two are to happen, then we should see some appropriate action in the next 2-3 weeks. So watch carefully. Chicago corn. The medium moving average, currently at 512, had been an effective cap on the market since about March, seemingly until this week. True, it had been previously penetrated, but had managed to eventually cap the market in June and July. This moving average is no longer declining, but is now flatlining and again being tested over the last 3 weeks, with so far a single clear close above the medium moving average, which is significant as we have today seen a push higher over the October 2021 low at 516 and towards a combination of 2014 high and the 61.8% absolute Fibonacci line, both at 525. Since late July, the market has been trying to form a rounded bottom pattern based on the low formed back in mid-July at the 473 level. However, the primary pattern here was not this rounded bottom, but, as was noted by me 6 weeks ago, and I quote, "I looked last week at the action since mid-May to possibly be a descending wedge pattern. This pattern is not complete yet, and it has a girth that I'm not too comfortable with, given its duration, but it also still stands out." And that's the end of the quote. Well, since then the pattern has cohesively formed and we have had a considered move higher, up and out of this pattern. Thus we have some potentials for the top side. A primary target X for the pattern would be in the 583 area, with a secondary harder to reach target X2 up in the 634 area. The first real topside obstacle has already been reached and punched through, and that was the 490 to 498 congestion. This is now support. I've already detailed some of the other resistances above, and to these I would add the optimized late February to date downtrend currently at 535, which is highlighted in purple on my daily chart. Between this and the declining long moving average, currently 567, we have a seemingly more severe congestion separated into what appears to be two individual bands of 548 to 556 and 561 to 567. I've also noted this week that in exiting from the descending wedge pattern, the market has started to form a small bull channel, currently 505 to 525. I have not as yet highlighted it, but I will probably do so next time if it is still in operation. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.